Okay, welcome back, everyone. I'm Guillaume. I'm here with Nathan from the Panoptic research team. This is Beyond the Greeks, research insights from the Panoptic team. We've been doing these for a few months now. This is very interesting, where we do some deep dive, some back testing, some kind of research insight that will likely transfer to a tweet thread, but now we have the researcher behind all of this present, so I can ask them questions and can present and add some color to it. This week we have Nathan about analyzing the call, the call win premia. And yeah, first of all, how are you doing today, Nathan?
All right, how are you doing?
Yeah, very good, very good. Yeah, it's sunny outside. I have some natural light. My
Right.
house is facing
Yeah.
north, I guess, so I don't have a lot of light, I guess. But yeah, this is fine. And yeah, the market has definitely been a bit more stable the last few days, but definitely been moving a lot. When it goes on, everyone is a super genius. When it goes down, when it goes up, everyone is a
Mm.
genius. When it goes down, everyone is depressed. So now everybody the tide lifted all boats for sure. Are you investing or at least on chain trading a lot, Nate? I don't know if I know.
No, really just putting all my efforts into Panoptic and hopefully building it out. So, on-chain trading isn't as exclusive.
Because
Who
you have,
knows? I'll go ahead.
yeah, you have a pretty, I mean, traditional training, traditional background. You
Yeah.
step to the dark side maybe in doing on chain virtual options, but yeah.
Yeah, I mean, hopefully, some of the regulatory barriers will come down with Coinbase's acquisition of Deribit. I'm hoping the U.S. will be more amenable to crypto options trading onshore.
If yeah, exactly. I think the uh yeah, poor open, but yeah, the past few years were definitely very adversarial. We're
Yes.
based in the
Yep.
US. We have to follow the rules, but yes, the Coinbase again leading the charge again, but yeah, they are definitely helping everyone in the field, not just kind of their bit, but also us as an options protocol.
Hmm. Yeah. You said pour open. Yes, pour open.
Was that?
Did you say pour open? Like
Yeah,
with their CFTC sanctions and whatnot?
yeah, poor them
I'm
again. Yeah, they were not treated fairly. Again, whatever. The Open was definitely kind of ahead of their time for sure. But sometimes you
yes.
have to be also able to kind of work with the environment. Yeah, apologies. All right, again. All right,
Bless you.
so
No,
thank you,
no problem.
Nathan. Yeah, so we'll get started. I think so. Yeah, Nathan here has a presentation about call win premium. We did one about put win premium. This is interesting. So now there might be different insights. This is a presentation here, Nathan. Yeah, take it away.
Yeah, just to start out, I pulled this graphic from Tasty Trade, actually. It's how they define a volatility crush. So, just from a quick optionality perspective, um, with an IV crush, and I think Amy discussed this in her bite on the post-election implied volatility. When there's a resolution of uncertainty in the market, an IV can drop precipitously. I think this helps call wing premia because a lot of the time, um, I've mentioned the Cross Creek Vanna before. If IV plunges and this affects an option market maker's delta or their Vega, a lot of the times they're forced to buy to cover. So it pushes the underlying price up, and that's very conducive to call option premium. So just a quick um, primer on that, and it plays into the properties we see with calling premia as it relates to the Uniswap IV that Panoptic uses. Um, but just a quick overview of the monthly streamia we see with ETH versus BTC. As you can see, they have an inverse relationship to each other. The high months for put wing premia correlate with low earning months for call wing premia and vice versa.
And
Uh,
maybe just to give some context, the wing side is that it's an LP position that's heavily kind of offsetted, right? Almost
yeah,
out of range. And I would say that the call will earn more fees if it's bullish. So you start very, very off, but then it works this way. Same thing with puts. So you would make the most fees if the price went down. So yeah, as you say, it's anti-correlated because one makes money, the other one stays out of range. That way. Is that correct?
yes. And I would also point out like the disparity between the two, like the averages, like the put wing premia for ETH, for example, if you look at the average, the monthly mean for put wing premia, it's about 1.2 percentage points higher than what you see for calling premia. And then on the BTC side, the put wing premia is about zero point 0.8 higher. So yeah, 0.8% higher than the call wing premia. But what's interesting to me, and maybe this just has something to do with the on-chain dynamics, is the even though the call wing premia is 1.2% lower than the put wing premia, it's still almost as high as the BTC put wing premia. So you see this homogeneity in that the put wing premia is consistently higher, but at the same time, ETH call wing premia is still almost as high as the BTC put wing premia. So I
Mm.
think that has something to do with the way the Uniswap IV is derived and ETH being the most actively traded asset. And this is reflected in the cumulative returns as well. Um, ETH, once again, the put wing premium reigns supreme. But uh, if you look at the BTC short 10 delta puts, it's 115% over a span of 4 years. Uh, ETH call wing premiums, or what is it? Oh yeah, BTC is 115%. ETH is 114% on the calls. So it shows you ETH generally is more lucrative. But once again, the pulp wings reign supreme.
And
And I
we
think that as some, I'll
yeah,
go
we did
ahead.
see it was a definitely a sideways market, but yeah, I would say that the being on the downside, selling puts or at least getting exposed has a high level of volatility. When the price spikes up, yes, it goes down, but that it's not associated with an increase in volatility. So I can imagine that the absolute amount of fees collected from the put side does kind of drip more fees than a similar move on the outside upside, if
Yeah.
it were call.
Yeah, and I've asserted the position before that there's a prevailing positive spot vol correlation in crypto. Like spot goes up, vol goes up, but it slowly drifts upward. So it's a stair step pattern. So it's up the stairs, down the elevator. So with spot, so when spot crashes down, IV really crashes up, if that makes sense. Um, and that's reflected in the next figure, which shows that and this might just be an on-chain quirk as well, but the best month for ETH and BTC across this sample period, this 4-year sample period was uh July 2022. And that's when there was a major rally in both underlying ETH and spot, and the IV had crashed down from the Terra Luna debacle a few months prior. So this is what I would classify as a relief rally. and broader markets, like once there's a resolution of uncertainty, it kind of smooths out the underlying, and it allows the underlying to quietly rally and maybe vol to go back up again. But it's not like what you just described with the Pulpwing premia, where vol spikes up and price violently crashes down. And this property generally tracks across the sample period. Sometimes uh, over certain months, put wing premia and call wing premia were both high, but that's when the market was whipsawing, as in there'd be violent crashes upward, violent crashes downward. But for the most part, it was an inverse correlation across the entire course of the sample. And the reason I wanted to look at both call and put wings has to do with what can be labeled as the VRP smile, or volatility risk premium smile. This is for oil options, or crude oil options, ranging from 2000 to 2021. But if you look like on this tail end here, um, in terms of moneyness and 20 days to maturity, so when the gamma is highest, that was the most lucrative uh, strategy for oil. So far out of the money call options with short maturities, that generated more for on the tail end than it did for, say, Pope wings. Now, some of that may have to do with crude's idiosyncrasies as a commodity. So you have to deal with supply disruptions and shocks, and you have to hedge to the upside. You're worried more about the upside to the downside, but you don't have to worry about that in crypto.
And so this is
So,
interesting. I thought
oh,
this
go
was
ahead.
the this is interesting because this is the y-axis is the percentage premium retained. So this is kind of
Yeah,
post the fact. You sell some options maybe, and then you retain some of it, but it's is it correlated? It's not quite correlated with the IV, because the IV does also have a call skew, I guess. But here it's not just the IV being higher, but it's kind of realized in a way because you also get more. Might the IV might be higher outside. I mean, at the money very low, but outside you have this smile, but then it does translate in just an absolute percentage, which is kind of relative to itself. Which is, again, I've never seen that data. It's very interesting.
yeah, yeah. So, and it's kind of counterintuitive. You would expect, like in equities, the put wings would far overwhelm and surpass the call wings. But in commodities, this quirk can present itself. Now, once again, we've seen that the put wings surpass the call wings in Panoptic's case for pin options selling the put wings, but who knows? In Deribit, like off chain, this might present itself. Like the call wings might surpass the put wings. I don't know. Um, as well, like I said, the general property is up the stairs, down the elevator. And that's definitely more so the case in Panoptic's case, where RIB is more of a realized measure than an implied measure. But that begs the question, though, since you don't have to necessarily worry about supply disruptions as you do in traditional commodities, in the case of crypto, then what stems on the call wings being somewhat lucrative? And in my opinion, it has to do with like traditional relief rallies in equities. Like the top chart is the VIX index leading up to an FOC announcement with summary of economic projections, or SEP release. That's the black solid line. The blue dotted line is without those SEP projections. Um, and as you can see, it precipitously drops after the announcement because you have this resolution of uncertainty. Meanwhile, the bottom figure, the blue dotted lines, are confidence bands, but those are if you were to go long in the ES, so S&P futures leading up, to an FOMC announcement with those SAP projections. So it's really about those resolution of uncertainty within the market, and then there's a subsequent relief rally and a lessening of volatility. So I think that's what we're seeing here of implied volatility. I think that's what we're seeing play out within Penn options. After there's a major event, volatility drops and spot rallies in any given underlying Uniswap pool. So I think that's what's driving the main driving force behind um, generating this call win premium. And to show that generally, although put wing premia overwhelms the call wing premium Panoptic's case, there's still far more robustness to the upside in crypto and far more symmetry in that VRP smile as compared to traditional asset classes just by looking at these metrics. Now, once again, this is off chain versus off chain, but look at the BTC call at the money IV versus S&P call IV. Now, granted, there are more spikes downward in the BTC call ATM IV versus the S&P, but the base level for BTC call at the money IV is generally much higher than S&P IV, as well as the risk neutral skewness, which is like a forward-looking estimate of skewness that generally tracks higher for BTC than S&P.
What's the risk neutral
So
skewness again on the lower left hand?
like we have yeah, that's a forward-looking measure of a skewness just generated through options metrics.
So the
So most of the time skewness is a backward-looking measure. This is a forward-looking measure of skewness. And BTC tracks far higher than the S&P 500. So my hypothesis is that crypto FOMO, in general, fear of missing out, drives what I call, and this is a name of my own making, a higher relief risk premium. We've already gone over the volatility risk premium and how it relates to put wing premium. And in technical terms, there's a volatility risk premium to the upside too. Hence the VRP smile. But in this case, I think it's more appropriate to dub it the relief risk premium in air quotes because really what you find in the case of pen option wing premia is that the risk it's more conducive to calling premium times of underlying market tranquility than market turmoil, as is the case for public premium. So it's the same driving force as equities per se, with relief risk rally or relief rallies, as opposed to like supply disruptions with commodities. But I think it's accentuated by the fact that you have this added crypto FOMO element. So that's the presentation. But it's all about trying to juxtapose crypto as an asset class compared to these more traditional asset classes. And once again, although the VRP smile isn't biased towards the calling side like it is in, say, the case of crude oil, it's pretty symmetric when you look at a case like equities.
so a lot of
So
folks may say that the Bitcoin now trades like high beta to S&P or Nasdaq, but you don't believe
yeah,
that, I guess.
well, the way I'd look at it once again, it's on chain. It's our measure of put wing premium, call wing premium through the lens of Panoptic. You did it through a Deribit, maybe you get different results because we have a different implied volatility measure.
That's true. And then yeah, maybe the one way to tie this back to Panoptic options are Uniswap liquidity pools. there is some level of kind of human nature as to where you deploy your liquidity, and we've seen this quite a bit. See the Bitcoin pools, a lot of liquidity is out of range, and typically when the price going down, people are not as active in managing their liquidity, and they may have an oversupply of liquidity on the way up. I guess as it moves back up, or when it goes up, maybe you want to capture these gains, and you're more be more inclined to manage this
Yeah,
position.
once again, going back to what we've been harping on, I mean, for years now, like Uniswap LP positions are just selling put options, right? You can't flip it around. You can only flip it around to buy a put option, like going back to the put wing premium presentation on a platform like Panoptic. Call options aren't even in the ether unless you go through a platform like Panoptic. So Panoptic gives you, I mean, another shameless plug. I wasn't going to add another slide for it, but you can't harvest these properties unless it's on a platform like Panoptic.
And that's
So,
definitely true. And we've seen even some similar to your smug there. A lot of calls queue. A lot of folks are
mm,
buying options on the call side, which is again, as you say, the one step removed from Uniswap LPing. But yeah, you can't really buy call options anywhere except Panoptic, which is kind of at least on chain. But yeah, very very cool. So yeah, the crypto asset. I do think like you that it's a unique type of asset class. It's not all following either trends or existing assets. It's just a new way to trade new assets. So that's also why
yeah,
it's so different than what we've seen in TradFi for sure.
yes, absolutely. And it's all about just drawing parallels, like what are the disconnects to equities and parallel, well, and direct parallels, same with commodities, because crypto kind of is um, like it's a cryptocurrency, so it shares quote unquote characteristics with FX, with equities, with commodities at various different tiers. Um, and that's what makes it the most unique hybrid asset class I think we've ever seen. So it's all about trying to draw distinctions, draw connections, and see where it forks on its own path from those as well. And that's what I tried to do here with the
Yeah,
call-in premium.
perfect. All right. Yeah, this is great. So yeah, thanks a lot. We might see this transform into a research bite, so you can also watch this video
Mhm.
again or read the bite as well if you want to dig deeper. Feel free to reach out to Nathan or I if you want on Twitter or could be on Discord as well. But yeah, this was great. Thanks a lot, Nathan.
Yes, thank you.
All right, so this is it for Beyond the Greeks. Next week, who knows? I think it's going to be Amy, but I'm also eager to look forward. If you have questions or ideas from yourself that you want to see us cover, feel free to reach out as well. I'm more than happy to see kind of what
Yes,
people have in
absolutely.
mind. But yeah, on that front, oh, there might be a yes. Yeah, this is great. Thanks a lot, everyone. And yeah, we'll stop here. And this was Beyond the Greeks with Nathan Bergs. Show music. All right.